Hello and welcome to today's daily market update with me, Joshua Mahony, research analyst here at Alpari UK. Now the global indices are pointing lower today off the back of some significant losses yesterday as well, so it does seem to be a bit of a continuation of that today. Overnight we did hear out of New Zealand that we heard that the business confidence figure over there actually rose to the highest level in 20 years. Now we have seen some pretty significant moves in the Kiwi off the back of this. And what is really notable about this release also is the fact that they have actually seen a shift in the expectations of businesses in terms of interest rates, that they all expect them, or 71% of the respondents actually expected them to be rising in the near term. That was up from 30% in June. Now what's key about this is the fact that now we haven't seen a big move to the downside of interest rates in New Zealand recently, but we also haven't seen a move to the upside, and thus should we actually see a rise in it, then it's likely to strengthen the New Zealand dollar. The RBNZ itself has actually been trying to talk down the New Zealand dollar throughout this year, or 2013, and so realistically people don't actually believe that they are going to take any real tangible steps in terms of monetary policy to actually pull the New Zealand dollar down, irrespective of the fact that we have seen such strength recently, and this business confidence figure really is key in understanding that. Now also today we did get the UK CPI figure. It fell unexpectedly from 2.1 to 2%. Now bearing in mind 2% is that inflation target that is provided by the Chancellor of the Exchequer for the Bank of England to try and look towards as a sort of major target. The fact that we've actually returned to 2% is very notable. We haven't actually seen it there since 2008, and also we do expect it to fall further. Now bearing in mind that should we see low inflation or lower inflation, it actually means that the Bank of England is likely to be able to keep its interest rates low for a longer period of time, so it means sort of looser monetary policy off the back of this potentially. We do expect the inflation level to potentially fall further off the back of some of these measures taken by the government in terms of the environmental taxes on energy companies, so that's likely to be passed on to the consumer in the coming year in the form of lower energy prices, which in turn is likely to feed in to the CPI figure, which in actual fact when you look at it was driven lower today off the back of lower food prices and non-alcoholic drinks prices, but the actual upside in the figure was seen from the likes of motoring fuel, which if we do expect it to go down over the coming year, then that's going to be more downward pressure on the CPI figure. Also today we did hear out of the Eurozone that the industrial production figure rose 1.8% in November. Now this is key for the fact that it is actually the biggest rise in the industrial production figure since we actually saw this recession happen in 2007. And it comes off the back of a very strong period for the Eurozone. Last week we saw very strong retail sales figures. We saw the unemployment rate stay steady, and we saw strong industrial production and factory orders coming out of Germany. So really it does seem to be a very good time for the Eurozone at the moment. It's very good and strong start to 2014 for the Eurozone. So that's it for today, guys, and if you want any more news and analysis, come and check out the Alpari newsroom at alpari.co.uk/newsroom, or check me out on Twitter. My name is Joshua Mahony, research analyst here at Alpari UK. Have a great day.